It's the third straight quarter of losses for Tata Steel, unsurprisingly, given the fact that we had the lockdown, we had steel prices falling in Europe as well. There was massive compression in steel spreads. In fact, European operations posted a huge loss on the EBITDA front, but it was the India business that supported the overall consolidated EBITDA. But overall, revenues came in down by 32% at roughly about 24,289 crore rupees. I would say largely in line with expectations. Consolidated EBITDA came in just at 597 crore rupees, so margins came in at 2.5%. This was way off expectations, and overall the loss figure as well was wider than most expected. It came in at roughly about 4,373 crore rupees. Volumes in India as well as overall volumes did decline. 22% fall in overall volumes. In India, deliveries were down by 26%. The India EBITDA per ton as well fell quite drastically. In fact, it was almost an 8,000 rupee dip. That means it came in just at about 4,375 rupees, 4,969 rupees per ton. So a massive fall being witnessed in the EBITDA per ton as well. But in the commentary, the management has said that look, we are anticipating the challenges ahead, and accordingly, they have built a liquidity buffer of roughly about 20,000 crore rupees. Furthermore, keeping it with the entire cash management bit, they've managed to cut down the net debt in the India business by roughly about 1,700 crore rupees, a little lower than that. And this was despite the fact that 2,000 crore rupees of fixed cost was under absorbed because of lower volume. So basically, it was the negative operating leverage. This was a hit straight to the bottom line. They also did raise around 5,935 crore rupees as long-term debt to sort of, extend the maturity profile. Europe business, meantime, of course, was hit because of the sharp fall in deliveries and the massive compression in steel spreads, which the management has said that has actually come to an unsustainably low level. They did say that they did receive some support coming in from the UK government as well as the Dutch government, which includes cash flow deferrals of payables. So that's something, of course, that did sort of help them, cross this hurdle of COVID. Furthermore, the management has said that, on the domestic front, demand is slowly improving. Prices as well are slowly recovering, and this we are witnessing on a month-on-month basis. So as demand recovers, we will reduce our export ratio, and that in turn will lead to margin expansion. We are anywhere 2.5%. So from here, it's only going to be upwards. Also, the management has also spoken about the fact that capacity utilization has increased. So while in June 2020 it was at 90%, now it is at 95%. And finally, Mr. TV Narendran wraps up the quarter by saying that he is cautiously optimistic going forward. So yes, third straight quarter of losses for Tata Steel, with the margins as well plummeting to just 2.5%. I would want to watch out for any sort of support coming in from the European government, from the UK government in particular, since we have this statement coming in from the management that the spreads are now at an unsustainably low level.